Hello everyone, this is Rachel live from Kalkine Studios and you're watching The Buzzing Trends. Expectations of a rate hike dragged the Australian market to fall the most in the last month. Let us now take a look at how the market is behaving today. The S&P ASX 200 is up today, gaining 1.33% to 7,331.6. The top performing stocks in this index are IGO and Pilbara Minerals. 10 of 11 sectors are currently higher, along with the S&P ASX 200 index. Telecommunications services is the best performing sector so far today, gaining 1.76% in the morning. Meanwhile, taking cues from Wall Street, that kick-started its week sharply higher. The ASX 200 jumped up during early trading hours. Monday saw the Australian market reacting to rate hike expectations after St. Louis Fed President James Bullard's statement on Friday that said the Fed could raise rates as soon as next year. The benchmark index fell by almost 1.8%. Yesterday's losers, primarily stocks such as banking and mining players, are picking up steam today. Now let's look at the Australian updates on COVID-19. New South Wales has recorded 5 new COVID cases in the last 24 hours, whereas New Zealand recorded 1 new local case. Victoria has no new cases. Health teams are testing people in high-risk areas. Moving on now, a diversified and investment group, the Seven Group, has removed all conditions from its takeover bid towards Boral to attract more investors. The offer to acquire Boral is scheduled to close on June 30th. Other news from Boral is its success in completing the sale of its US building products arms to Westlake Chemicals for $2.9 billion on Monday. This was managed by the Bank of America. Boral shares have been constantly trading higher than the cash offer price of $6.50 per share from $7 that was made on May the 10th. Boral has requested the shareholders say a no to this takeover offer from Seven. Moving on to the next news now. Australian investment company Milton Corporation announced today that the firm will merge with Washington H. Soul Pattinson and the company with via a scheme of arrangement. The merger will help in the creation of a more diversified Australian investment house. The focus is to continue long-term market outperformance and growth in dividends. The combined company will be worth $10.8 billion in market capitalisation. Moving on to the next update now, mining company Monadelphous have won a run of new contracts that together will deliver $215 million in revenue. The contract includes a maintenance agreement with BHP Olympic Dam, a 2-year extension to the existing maintenance contract at the site, which spans civil, structural and mechanical engineering. The company also won a contract in the Pilbara region with Rio and BHP. Moving on now, MadPaws is an Australian-based $37.5 million pet services business, providing an online marketplace for pet-related services. They posted a very strong quarter result, especially considering their third quarter is seasonally the slowest quarter of the year for the company. The gross merchandise value for the third quarter of financial year 2021 shot up over 43% compared to the third quarter of financial year 2020. This affirms the accelerated recovery after the COVID-19 pandemic. This is also reflected in the growing customer numbers, which has risen by 10% over the last quarter, and a record number of bookings of 13.5 thousand were received in the third quarter for financial year 2021. Unique customers on the platform have grown to 95,000 customers at the end of the March quarter. That's reflecting a growth of over 8,500 customers over the quarter. On that note, it's time for a very short break. Stay tuned, I'll be back with more trending updates very soon.
The market takes the weekend off, but your money won't. Get a comprehensive update on the ASX listed stocks and market trends. Watch the experts touch upon the fundamental and technical developments and trending strategies in the equity space. We will be your daily guide as you explore the Australian share market, be it global vaccine developments or China's trade relations or global political turmoil or economic revival prospects. We will bring you live updates driving the equity market trends. Kalkine TV.
Hello and welcome back. This is Rachel live from Kalkine Studios and you're watching The Buzzing Trends. Let us look at this next trending news now. Cedar Woods Properties, a property development company, released its trading update with record pre-sales achieved. Notably, strong sales conditions across the company's high-performing projects have driven pre-sales to a record $439 million as at the 31st of May. Cedar Woods reported record pre-sales numbers. The company has experienced strong sales conditions across its high-performance projects. The company stays well placed to deliver strong growth in earnings into the medium term. Moving on, sectors that are sensitive to the economy's fluctuations, such as energy firms and financials, can be seen recovering in today's session after they had fallen sharply when the Fed officials caught market participants off guard by anticipating rate hikes as early as next year. Overall, the market is reflecting sinusoidal trends amid hawkish interest rate guidance by the US Fed officials and changing rate expectations of domestic economists. The rate hike expectations and inflation anxiety are spooking the investors to remodel their portfolio allocations. And we can see interesting trends on that front. The tech sector is one such interesting theme to evaluate. Although the sector can be seen under some pressure today post yesterday's dramatic market dip, this looks more like a temporary correction. Early this year, rising bond yields and growing inflation concerns amid economic growth revival accelerated investors' rotation out of the technology stocks into cyclical stocks. Defying the prominent trend witnessed in most of the first half of the year, market sentiment seemed to now be tilting towards growth-oriented technology space when the rate hike anticipations have again taken a strong foothold in investor psychology. On that note, once again, it's time for a short break. After the break, we're going to discuss if the index heavyweight and BNPL Darling Afterpay holds a bright future in 2021.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
And welcome back. This is Rachel live from Kalkine Studios and you're watching The Buzzing Trends. Let us now see if the index heavyweight and buy now pay later darling Afterpay holds a bright future in 2021. Well, the BNPL player Afterpay evolved as an outperformer in the Australian fintech segment in 2020, with its share price delivering a sky-high return of 850%. It reaped the rewards of a marked shift in consumer behaviour towards online shopping, digital banking and no-touch payments during the pandemic. Since then, market players have immensely betted on the potential of Afterpay, making it rally almost 10 times from the lows of the last year. At present, market players are quite optimistic about Afterpay money launch in the first half of financial year 2022. It was the first partner to join Westpac's cloud-based banking-as-a-service platform, which will grant the company banking capabilities such as cash flow tools and transaction accounts. Besides, the payments company is exploring a listing into the US market with much of its institutional investor base. in a bid to tap investors who lend a greater multiple towards growth. However, we cannot avoid that the success of Afterpay in global expansion and increasing customer and merchant base worldwide is breeding competition in the lucrative fintech industry. While several green shoots are gleaming for the company on the operational front, we also have to look at the other side of the story. The fact that it is no longer the only big fish in the ocean is clearly evident. Afterpay's competition has particularly notched up with rivals such as Zipco, Sezzle, Hum. They're all diving deep into this space. Besides, market valuations for this BNPL juggernaut needs to be taken into consideration. One needs to carefully ascertain via a mix of fundamentals and technical whether the company will be able to justify its valuation by an uptick in cash flow. Well, it will be interesting to see how the BNPL space shapes up, but that's all for now in the Buzzing Trends Show. Stay tuned for more live updates on Kalkine TV across the economy, markets and sectors. We'll be back in a short while with our next live show, the Mid-Market Pulse. I'm Rachel for Kalkine TV.